Hello, this is Jo from Kepler Trust Intelligence. In today's video, I'm going to provide a brief overview of Schroder AsiaPacific, which has the ticker SDP. So let's start off by looking at the managers. They're Richard Sennett and Abbas Barkhorder, and they took over running the trust in 2021 on the retirement of veteran manager Matthew Dobbs, although it's worth saying that Richard had worked extensively with Matthew for some time prior to this handover. Rich and Abbas have spent their investment careers working in Asian and emerging markets at Schroders, and together they have a combined investment experience of almost 50 years. They're supported by the extensive research team at Schroders. That's over 40 analysts in 6 offices across the region. And I think the benefit of that on-the-ground research capability shouldn't be underestimated when it comes to investing in a diverse and complex region such as Asia. So what's the principal investment objective of the trust? Well, it's to achieve capital growth in excess of the MSCI all-country Asia excluding Japan index in sterling terms over the long term. And that's through investing in the equities of companies located in Asia. Worth saying that excludes Japan and the Middle East, but it includes Far Eastern countries bordering the Pacific. So essentially the trust provides an opportunity for investors to gain exposure to the long-term Asian growth story and also some of the globally leading companies that we see located there. Digging down at the portfolio, Richard and Abbas hold around 60 companies across a wide variety of sectors and countries. They're bottom-up stock pickers, so they're looking for quality companies at attractive valuations, but they will also review the country allocations with input from the wider Schroder investment team. Coming back to that focus on quality, that aims to mitigate the risks of investing in Asia. So they're looking for companies with strong market positions, with sustainable earnings, with appropriately structured balance sheets, and also with good corporate governance, which is also really important in the Asian region. They're also looking for strong management teams, and again, that on-the-ground capability pays off here. The team holds over 2,000 company meetings each year. I'd recommend STP's monthly fact sheet, which provides an excellent insight into the current portfolio weighting. So if we take a look at the recent fact sheet, you'll see the trust is currently overweight information technology and financials in terms of sectors, and Hong Kong, Singapore and Vietnam in terms of countries. You'll also notice that the trust is currently significantly underweight China, which has obviously proved beneficial over the last year or so. So the portfolio is well positioned to take advantage of Asia's leading global exporters, as well as the growing consumer class in the region. And we're seeing rising household incomes and also a burgeoning middle class. And we explore this in more detail in our latest article, Crouching Tiger, Not So Hidden Dragon, which you can find on the Kepler website. Looking through the top 10 holdings, themes include semiconductors, which are forecast to enjoy strong secular growth and the adoption of artificial intelligence, which has been a very hot investment topic of late. Also worth saying that SDP has held Samsung and TSMC for more than a decade. They're respective market leaders in their sectors, and it shows the long-term nature of many of their holdings. The trust also owns ICICI and HDFC, and they're well positioned to benefit from the strong growth in the banking sector in India. So what about performance? Well, moving up the fact sheet, as you can see, the trust has a strong track record of outperforming its benchmark index in terms of net asset value over 3, 5 and 10 years. And while the trust's aim is principally capital growth, as we mentioned earlier, it has generated a modest income which has been maintained or increased for the past few years and is currently trading on a dividend yield of just over 2%. So the board's policy is to pay out substantially all of the revenue received each year, which means some dividend is likely to feature, but it will vary across different years as the portfolio composition changes. SDP is also one of the largest and most liquid trusts in its peer group, which is the AIC Asia Pacific category, and it's currently trading on a discount of around 11%, which could provide a kicker to returns if the discount narrows. Gearing hasn't been a significant feature of the trust over the past few years, although it has increased to 3% over the past few months, which we see as a positive sign for the trust due to the attractively valued stock opportunities that Richard and Abbas have identified. SDP has a tiered management fee which passes on the economies of scale to investors as the trust grows in size. So that's 0.75% for the first 600 million of net assets, and this drops to 0.6% above this. The current ongoing charge, as you can see on the fact sheet, is 0.90%. If you would like to find out more about SDP, there's a wealth of information on the KTI website, including our latest research note, which you can find here. I can also recommend the Insight articles, which you can find here on the Schroders website, where the managers discuss their thoughts on opportunities and themes on investing in Asia. So that concludes our whistle-stop overview of Schroder Asia Pacific. Thank you for watching today, and we hope you join us again soon.